my target on silver now is 200. So particularly silver, being where it is down just under 60, if it can go from 60 to 200 this year, and maybe even faster than the end of the year, that's pretty steep. And gold, obviously, if it can go from 4,000 to 7,000, would be an unbelievable move. So
you got to price assets in gold. You put up that chart of the stock market, put it up priced in gold. It looks very different. The market is lower than it was 20 years ago, priced in gold. So you could say we've been deflating for 20 years as long as you measure it with gold. If gold is your monetary measurement, then we've had deflation, for over 20 years.
Recent price corrections have made some investors cautious, while others believe the pullback has created a new buying opportunity. David Hunter, Chief Macro Strategist at Contrarian Macro Advisors, and Peter Schiff, financial commentator and podcaster, recently shared their outlook on precious metals, arguing that the long-term bullish trend remains intact despite recent volatility. Hunter believes the recent correction in gold and silver has largely completed its purpose by removing excessive speculation from the market. He pointed to silver's sharp rally from around $50 to approximately $122 earlier this year, describing it as a near-parabolic move that attracted many late investors. Although the pullback lasted longer than he originally expected, Hunter said investor sentiment has now become much more balanced. Many traders who entered the market near the highs have already exited after suffering losses, reducing speculative excess. In his view, this creates a stronger foundation for the next phase of the bull market. Based on his technical analysis, Hunter believes silver has found support near an important long-term trend line, while gold has held in the $3,900 to $4,000 range. If those support levels continue to hold, he expects another significant rally to develop. Hunter's current price targets are ambitious. He believes gold could rise to $7,000 during the current market cycle, while silver could climb to $200 from levels just below $60. He acknowledged that such gains would represent an extraordinary move but argued that precious metals have experienced similar explosive advances during previous bull markets. Looking further ahead, Hunter outlined an even more optimistic long-term scenario. He expects the next major economic cycle to be driven by inflation and rising commodity prices following a broader economic downturn. Under that scenario, he projects gold could eventually reach $20,000 per ounce and silver $1,000 per ounce. If you found this analysis informative, please support the channel by liking the video, subscribing, and sharing it with friends and fellow investors. Your support enables us to continue delivering in-depth market analysis. Thank you for watching.
So gold, I'm equally bullish on gold and silver. We had that great run from November to January in silver, and gold was a longer run than that. But silver got up to 122 from it had been in the 50 area when it broke out. That was a long-term breakout point. There's 48 or 50, and it just took off and basically went parabolic. Covered more than doubling in probably 150% in 3 months. And so people are you had to correct what was speculative blow off. People were just through the roof in bullishness, and you had to correct that. I thought it'd correct in a few months, but it's taken 5.5 months now. And you've gotten a lot of that speculation out of there. Certainly a lot of people who jumped in the last inning of that run. They weren't there at 50. They weren't there at 75. They might have gotten there over 100. And all of a sudden, they're down in half almost, And so that wakes you up in a hurry and turns you bearish in a hurry. So I think we have the sentiment there now, the backdrop and sentiment there now where we can come out of this. And I believe normally I'd say a parabolic usually comes at the end of a move, at the end of a big cycle move. But in this case, it was so fast and it unwound so fast that I think there's even a steeper move following that. So if you can do that in 3 months, you can see another My target on gold is 7,000. My target on silver now is 200. So particularly silver, being where it is down just under 60, if it can go from 60 to 200 this year, and maybe even faster than the end of the year, that's pretty steep. And gold, obviously, if it can go from 4,000 to 7,000, would be an unbelievable move. So that's what I'm seeing, and that's what I expect. I realize there's lots of people out there in that field, people that follow gold and silver closely, who think they both have more to go. There's the breakout in silver was 50. Gold looks like it could go back 3,500. And so I can't say that's impossible, certainly, until this thing really gets turned around and you start seeing a little more upside. There's always a risk that, this is just another dead cat bounce and it goes lower. I think, based on what I see in sentiment and what I see in the, in the charts and everything, there's a pretty good chance we came down to a trend line on silver, and gold looks like 4,000 or 3,900 is a pretty good place. And ironically, and I didn't do it for this reason, but if my numbers, and my numbers may not be right, but if my numbers are right, 200 on the silver to get back down to 50 would be about 75%. And it would be exactly 75%. That would be, kind of a normal in the if I'm right about what equities are going to do and what we're heading for in terms of global bust. Silver is a very cyclical metal, and it will get hit almost as hard as equities. 75% would make sense to me. That would take you back to that 50 breakout point that all these technicians think is necessary to get going. So you could have it, but not have it now and have it later. Got down to 56 in this correction. Gold from 7,000 to 3,500 is 50%. 50% retracement would be a very normal retracement in anything, but in gold, certainly that would make sense. I guess my feeling is that we're too close to the bust for anything like that, because that's going to take time. You just don't all of a sudden roll out, we're revaluing gold, and I'm not sure how we do that exactly anyway. It's not like we're in charge of that. So I'm skeptical of that, certainly skeptical of it happening before a bust. By the way, I do have a $20,000 target for gold. It's just that I think that comes in the next cycle when we have all that money going to work. It drives, the next cycle is going to be a commodity cycle, an inflation cycle, and I think gold and silver are going to be the top performers in that, or among the top performers. So I have silver going to 1,000 and gold going to 20,000, just not this cycle.
Okay.
So I'll top them, but just not now.
Peter Schiff offered a different perspective by focusing on how inflation should be measured. He argued that many people misunderstand inflation because they evaluate purchasing power only in US dollars. According to Schiff, when assets are priced in gold instead of dollars, a very different picture emerges. Schiff noted that while the Dow Jones Industrial Average has risen dramatically over several decades in dollar terms, it has actually lost value when measured against gold. He argued that gold has increased from roughly $35 an ounce decades ago to around $4,000 today, meaning many financial assets have underperformed real money over the long term. He extended this argument to consumer prices, suggesting that many everyday goods appear cheaper when valued in gold rather than dollars. In his view, people holding gold have effectively experienced rising purchasing power, while those holding cash have faced persistent inflation. Schiff also compared precious metals with Bitcoin. He argued that only investors who bought gold or silver near recent highs are likely to be losing money today, whereas he believes many Bitcoin investors who entered during recent years remain underwater. He said long-term gold and silver investors have generally preserved their wealth far more successfully. Let's get back to the video.
Inflation is the same way we've been seeing it. You got to price assets in gold. You put up that chart of the stock market, put it up priced in gold, it looks very different. The market is lower than it was 20 years ago, priced in gold. So you could say we've been deflating for 20 years as long as you measure it with gold. If gold is your monetary measurement, then we've had deflation, for over 20 years. But consumer prices, even then, even if you measure the CPI in terms of gold, everything is cheaper. Right? Food is cheaper today than it was if you got gold. So we're experiencing deflation. It's just that very few people realize it because they don't have gold. They have dollars. And if you have dollars, you got inflation. I mean, the Dow was under 1,000 back then. And so in real money, the Dow is lower today than it was when it was at 1,000. And it's at 50,000. And that's because gold was 35. So the Dow's gone from 1,000 to 50,000, but gold's gone from $35 to $4,000 during the same time period. Silver took that out in a big move, and now it's kind of pulling back to that breakout point where what used to be overhead resistance now looks like support. And so to me, when I look at that chart, I just see a bullish breakout. I'm not worried about the move from 120 down to the 50s. I'm putting that in context. And again, if you zoom out and you look at that longer term chart, look at where silver started. I mean, that is a beautiful bullish chart. And it looks like there's no overhead resistance. I don't think the 120 peak is going to be any kind of substantial resistance, nor do I think, a lot of people are trying to compare it to the peak that we had in 1980. And they're saying, oh, this is going to be a generational high in silver. This doesn't look anything like that because look at how much time we went sideways between 1980 and now. Compare that to the move that existed in the 60s and 70s that led to 1980. I mean, that was a big move. Silver basically went from $1 an ounce to $50 an ounce. So that was a 50x move. We're nowhere near a 50x move on this leg. Like that's the only time I've ever recommended people buy silver was when it was at the absolute high. And of course, if you watch silver for 20 years and never bought any, and then you went all in at 120, that ain't my fault. I never recommended that. But I would definitely say that, especially in gold, but probably also in silver, very few people that own gold and silver are losing money. I mean, the only way you would be losing money is if you just bought a few months ago. But you can contrast that with like Bitcoin, because it's usually the Bitcoiners that are making fun of me because gold and silver have gone down from their highs. Because, Bitcoin is down from its high. But the big difference is most of the people who bought Bitcoin are losing money. And that is not the case with gold and silver. Hardly anybody who bought gold and silver is losing money. But most of the people who bought Bitcoin are. So that is a big difference. Now, yes, there are some people that bought Bitcoin that made a shitload of money, right? But they bought it 15 years ago. They didn't buy it within the last few years. Whereas people who bought gold and silver a couple of years ago are still making good money, or even a year ago.
To support his view, Hunter compared today's market with the precious metals boom of the 1970s, when silver climbed from roughly $1 an ounce to nearly $50. He argued that the current cycle has not yet produced a move of that magnitude, suggesting there could still be substantial upside ahead. While Hunter remains highly optimistic about the future of gold and silver, and Schiff continues to argue that gold is the best measure of long-term purchasing power, both perspectives ultimately reflect personal market analysis rather than certainty. For investors, the debate highlights the importance of understanding both the opportunities and the risks as precious metals continue to navigate an uncertain global economic environment. If gold continues to outperform traditional financial assets over the long term, should investors measure their wealth in dollars or in gold? Stay with us for more in-depth market analysis and financial insights. If you enjoyed this video, be sure to like, subscribe, and turn on notifications so you never miss an update. Thanks for your support, and we hope you enjoy the video.